More and more people are talking about a lack of gold and silver. The system must be broken in a big way. It means that people who have gold and silver don't want to give them up, and people who don't have any are desperate to get some at any cost. Sure, it's scary that there isn't enough gold and silver, especially gold, since almost all of the gold that has ever been taken, 99.9% or a little less, is still above ground. Of course, some riches and other things have been lost, but getting gold shouldn't be too hard. What does this mean? Well, it tells us that someone is worried, and it's usually big money. Very rich institutions, people or families. They don't just want gold that hasn't been assigned a price from JP Morgan or the bullion banks. No, they want to touch you. What I think is the reason the price keeps going up, they have to figure out that real paper won't work in this situation. And what is the trouble? We don't know for sure yet, but I think it's ready to come out of the blue. Oh, or it could be a disaster that everyone has been predicting. It might be AI. We'll talk about that again in a moment because I have a really cool movie about AI to show. Oh, Bob Coleman is now on X. He works at the Idaho Armored Vault shop. He buys and sells valuable metals. He says the fee to borrow money to short SLV shares keeps going up. Oh, now it costs more than 9% to borrow SLV shares, while the number of shares that can be borrowed has stayed the same or gone down to zero. I also have David Jensen, who I've had on the show many times. The price to borrow SLV silver ETF shares went up from 2.5% yesterday to 8.5% today, he said. He also says that the fee to borrow money for the iShares SOV Silver Trust Exchange Traded Fund, ETF, has gone up from 2.54% on Friday, October 2nd, to 8.50%. It says in the SOV prospectus that this ETF can be used as a source for approved participants in bullion banks, but not for regular people like you and me. In order to get physical silver in lots of 50,000 ounces by selling shares. This can be done when people want to get real silver bars but can't find any on the market. Bullion banks and other approved participants can borrow SLV shares to buy physical silver without driving up the price of SLV shares. Several things, like the implied lease rate for silver, the difference between spot and futures prices, backwardation, we'll talk about that in a moment, daily price changes, the national mint, the silver shortage, and now the rising borrow rate for SOV shares in New York all point to a growing lack of physical silver around the world. So what does backwardation mean? Well, it's when the spot price, or price for instant delivery, of gold and silver is higher than the futures price. This means that people want to buy the metal right away. They don't want to wait. The futures market doesn't hold their faith. Because of this, the price goes up. The spot price, which is generally called contango, is lower than the futures price. Not sure how to say the name, but there used to be Antao Fakati, who has since died. He looked at the basis and backwardation. He was a scientist from Canada, and he said that the system of paper money would be in danger when gold and silver prices were always falling. It looks like silver has gone backwards. How can we be sure of that? Let's check out the silver futures quotes on the CME. The silver futures for December are the front month right now. The most recent price is 48.32, and the highest price yesterday was 48.55. But the high for the day on my trade system, where I can bet on spot silver, was 48.67, which is more than 48.55 per ounce. In other words, silver is going backwards. I checked this morning in the UK with the big bullion dealers, such as Atkinson's. Sorry, but we're not part of that consensus. They have a lot of goods that are out of stock. The other thing I've noticed is that over the last few weeks, they've had a message on their website that says because of high demand, delivery times could be pushed back by up to 5 working days. That's not normal then. We need to keep an eye on this. We don't know what the problem is, but I'm hearing from friends who worked in finance for a long time and are very well connected with it, as well as from people who used to not be interested in gold but now are, that, people are rushing to get physical. They want to be touched. Because of this, the loan market is in very bad shape. Oh, and what kind of problem could it be? I did say it might be AI. One of my friends told me about this video conversation yesterday. It's from 2 months ago and has just under 1,000 views, but I think it's huge. The title of the piece is Could AI Data Center Spending Blow Up the Economy? For Tech Bubble Ride Home with Paul Kudrowski. I'm also going to post it here. Oh, it's worth your 38 minutes of time. What does Paul Kudrowski mean? A lot of money was spent on AI and data centers, which was about half of the growth in the U.S. GDP in the second quarter. The U.S. economy is in a slump except for AI. In other words, it does keep the business going. Unless AI changes its mind, you can watch my interview with Kevin from yesterday. I posted it late last night, which is not like me at all. He tells us that the tech sector is the only thing really saving the stock market from falling apart. Take a look at that. Could it have something to do with AI? It's possible that a lot of the money for AI comes from private loans and private equity, and not from banks. This is something else Paul Kudrowski talks about. It's not clear at all. They keep you from having a balance sheet. Who knows, huh? It might be something else. It might be war. It looks like war is going on. Before we look at where the markets are, I wanted to read another post on X that I thought was really interesting. It's from a French guy I follow on X who lives in China. For Arnaud Bertrand, there are 354,000 people who follow him. He's not really into economics, but he's smart, and he said the following. Let's see when this was. I think it was earlier today. In other times in history, gold prices more than doubled in the main currency of the time, just like they did this year against the dollar, right? It happens very rarely and almost always means that people have lost a lot of faith in the current political and economic system. This goes all the way back to the Roman Empire and the so-called crisis of the 3rd century. Often it marked the end of one age of power and the beginning of the next. Things like the fall of Rome, Spain's fall from power in the world, the French Revolution and fear, the end of the Bretton Woods, and so on. That was back in the 1970s, right? It's interesting that this is often both a cause and a sign of these events, since it's a real transfer of wealth from the poor to the wealthy leaders who wear gold to protect themselves. This is what starts the political chaos. We're not really rich, are we? We've been saving a little gold because we've known this was going to happen for a long time. We're not rich or famous. We're not very rich. I'm not even sure how many of the rich elite are doing this. I don't think many of them will be able to make ends meet. Anyway, he adds, the strange thing about this episode is how quiet it is. We're living through what could be one of the most important times in the history of money, but not much has been said about it. Well, it's been talked about on my station and other channels on the other side of things. And why isn't it being talked about in the mainstream? Because they don't know much about gold. They don't look at the past. 5 to 10 years ago is all they remember, or maybe the Great Depression. They don't know anything about past or how important things are right now in the precious metals market. Let's take a quick look at the markets this morning. I'm 20 minutes past 8 a.m., which is a little later than usual, but not that late. Yes, gold is going down a bit, but it can always keep going up in the short run. There will be some changes. Anyway, it's only $10 less than it was. We're at $39.50, which is close to the low point. The high point has been $39.77. That is the price on the spot. As for silver, it is going down a bit right now. It was about 4:30 a.m. when I began taking this video. It's now 48.02, down about 50 cents. We know that the gold banks need money badly, so they will do everything they can on the paper market to bring down the price. It might work, but I don't think so. We should hit 50 soon, if not this week then, by the end of the month, or even next week. Okay, so we're pretty close to the silver cakes. Also, the stock market is going down a little. There is a small difference between the currencies and the dollar. The value of the pound has dropped by about 0.3 points. The euro has lost about 0.25% of its value. And I saw that house prices were low here in the UK. Halifax home prices fell more or less each month. The economy will not do well with that. It's likely one of the few things that's saving the economy from falling apart. That's it for now. Have a great day, everyone. Be careful. Bye.